Hello, investors. Welcome to Tony's Invest Ed. Today, we're going to talk about probably some things your financial planner, if you have one, or if you do your own investing, you may not be aware of. And that's fees, exchange trade funds fees, and mutual fund fees. Um, these fees can, over time, eat up a lot of your portfolio gains if you get into some of these expensive funds. So we're going to talk a little bit about where you see the expense ratio in this fund, in these funds, and what you should look for when getting into some of these funds, as far as fees and how to protect yourself from not paying too much in fund fees. So the next question you might have is, what are mutual funds? What are exchange traded funds? Um, well, those are pooled assets of investments that could be either stocks, bonds, or a combination of both. And they are diversified enough in most of them that can give you a little bit of peace of mind knowing that all your eggs aren't in one basket. But part of the problem with some of these funds is that there's a lot of buying and selling going on within the funds by the fund managers, and this causes some of the fees to increase from these transactions, and paying for also a professional money manager to manage these funds. They've come down in fees quite a bit over the last 10, 15 years compared to what they used to be. Some of the more expensive fees now are in the exchange traded funds more so than the mutual funds. And there's a difference between the two. Exchange traded funds are bought intraday within the marketplace, like stocks. Um, which a lot of people like. They like to trade them and not have to worry about um, at the end of day where they can sell, or buy, such as a mutual fund. Mutual funds are traded, or not really traded. Mutual funds are are exchanged either in or out. You either buy in or you exchange out at the end of the day. Um, so you have to wait till that period before you can actually exchange from one fund to another, or get out of one fund or get into another fund. So there's a difference between the two, and how you can uh, trade them or execute them. A lot of people, like I said, like the ETFs because they're liquid and they trade within each market day like a stock. Um, However, now their fees are becoming a little more expensive, and they're more popular. So that seems to be where a lot of people are going to, as opposed to a mutual fund. But mutual funds are still fairly popular. So, how do we find the expense ratio on a fund that we may want to purchase or trade? And there's a couple different ways you can find what the expense ratio is. And right now we're on the Vanguard website. Vanguard has a big mutual fund family. They have a lot of mutual funds, and they'll list the funds on their website, as well as all the information, the performance, and the amount of money that you need to invest in a particular fund, and also the expense ratios there. And you can see right here is where the expense ratio column is. And if you look at this particular fund, it has a very low expense ratio of 0.04%. So that's less than 1% uh, cost of being in this fund, which is very low. This one has 0.46%, which is almost a half a percent. And over time, if you were in this fund for 10 years, um, this fund would eat up about 5% of your portfolio gains. 0.5% over 10 years, it's 5%. Um, so, something like that, it's not bad really when you start getting into more than, uh, you know, eight, 80 basis points, which is 0.8%, or something like around 1%. Now you're talking over 10 years, that would be 10% of your gains just going towards the expense of that particular fund. So if you gain 50% over 10 years and the fund expense ratio was 1%, you're down now to 40%. So you lost 10% right there. But that's why it's important to see what these funds expense ratios are, um, and then try to figure out which one fits you, and go with ones that have a lower expense ratio. Just because it has a low expense ratio doesn't necessarily mean it's going to be a better fund, but you also got to compare performance, and you also got to compare, if it fits your investing style, uh, and all that stuff. So, but this is where you would find expense ratio. You can also find it in the actual fund prospectus, which is a document that is required for the fund company or the investment company to provide you, so you know all the information about that particular fund, who the managers are, the expense ratio, the performances, and all that stuff. So it's required by them to give you the prospectus so that you can um, make your decision on whether you want to be in that fund or not. Look at an ETF, exchange traded fund. This one is on Yahoo Finance, and I just did a screener up here for ETFs, and then 5-star rated, 4 or 5-star rated ETFs. And this one is one of the ones that popped up. So as I look at on here, you can see what the fund invests in. This is the overview here, um, and it gives you all the information here. But you can see that the expense ratio for this fund is all the way over here, and it's 0.54%, so a little more than 0.5%. Um, its rate of return for year to date is 5.4%, um, and its yield is 1.37%. So this kind of gives you an idea of what kind of expense ratios. This is a little on the higher side. Anything under 0.75% is fine. This is a little more than 0.5%, but if you start getting up over 0.75% or 1%, now you're starting to get into pretty high expense ratios. And this one is not bad, but it's getting up there. I like to look for expense ratios that are under 30 30 basis points or so. But this gives you an idea of what to expect when you look through an ETF, and the information. You can find the expense ratio here. If you find this video helpful, please hit subscribe down below. Thank you.